Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us David Flores Wilson, who's a managing partner at Sincerus Advisory. David, welcome to the program.
Thanks so much, Mike. Looking forward to the conversation.
Yeah, I want to dive into what you do and how you do it, but get us started first with a little bit of your story and background. How did you get into the financial services industry?
Sure. Yeah. In terms of my origin story, I've sort of kind of grew up in it. My dad was a CPA and, got little sort of bits of financial literacy at the dinner table. It wasn't that intentional, but, and then, I sort of also had this sort of entrepreneurial journey as well. I was kind of trading comic books in the neighborhood and trying to find, pricings, mispricings to arbitrage different pricings. And so I think that's, kind of set me off on my journey. I had an investment banking career for about 8 years out of college. And I started to just do a little bit of financial planning for friends and family that would, just ask me different questions like, and so the red versus buy spreadsheet I had developed, it kind of went around the office and people were asking me what to do with their 401ks. And so, eventually I decided to make that, that hobby my career and, transitioned from investment banking to wealth management and then opened up this firm about 5 years ago during COVID.
It's interesting. Kids can pick up so much at the dinner table. Like you said, I've found that I'm in marketing and consulting and my kids pick up things and none of them are in business or anything related to me, but they'll pick up these nuances. So I find that is so neat. And it's really powerful, though, to take that same concept and we need to be teaching our clients, like you, I'm sure, teach your clients, hey, look, once you get financial principles dialed in, that needs to be passed on to the next generation and the next generation, because I feel like too many times people would say, yeah, I've got that figured out. Oh, I know how to do that. And oh, my kids will be fine. But what if they're not? What do you do to make sure that you're teaching your clients to keep that legacy being passed on?
Yeah, it's interesting that you say that, Mike, because we work with a fair number of, multi-generational family businesses. And so, these owners, oftentimes, not every time, but they want to, transition that business potentially to the next generation and, kind of get them ready and mentor them. And, what we often say is that, the kids are sort of watching and listening, right? So when you're coming home from the business, sort of stressed out and tired and kind of complaining about the market and, and then you sort of turn around 15, 20 years later and you want them to join the family business, it's no surprise they might have some hesitation, right? And so it's if they can be intentional about imparting the knowledge that they have to that next generation around that family business and the learnings that they've had in a measured way, talking about the industry and the pros and the cons and the benefits of entrepreneurship, and so that they can, the kids can one day come into the family business if it's mutually beneficial. And so, but to speak more generally about financial literacy, I think that, financial planning for entrepreneurs and business owners, which, I primarily work with, is a little bit different, right? And I think that, I think a lot of our industry sort of says, hey, you have this concentrated asset in your business and you need to diversify and, put a bunch of money in a cash balance plan or profit sharing plan. And, oftentimes I'm like, let's hold up. Let's find out what the real rate of return is in the business. And if it's more attractive than what we can get outside in a diversified portfolio, well, then let's reinvest. But let's just know, what's the return on investment when it comes to buying that extra piece of equipment or, hiring a couple other people in the business. And so that we can be very intentional about, growing that business and making it a more valuable business and then potentially, doing exit planning related to that business years in advance of any potential, exit or sale or transition.
Yeah, that's a huge point, and I'm confident that we could cover a 3-day weekend seminar and still not be, scratching the surface of exit planning and financial strategies for business owners and that kind of thing. But talk a little bit about the power of planning early, starting early. When you talk to a business owner and you say, hey, we need to make sure your ducks are in a row or your exit planning strategies in place. How early is early?
Yeah, my view is that there are elements of exit planning, that should be explored and discussed, as early as when the business is formed, right? I think
Well,
that, and assure, the vast majority of our clients are not going to exit, in the next sort of 6 to 12 months, but there's things they could be doing, in the business on the personal side and as well as on their financials, that could be helpful and give them options and flexibility, as well, like, make a more valuable business, when that time actually comes, right? And so,
yeah.
you think about just when you're forming the business, right? Is this a business that's a fast growing business that you might need potentially a large capital gains exemption, by making it a C corp and qualifying for what's called qualified small business stock, which has a $10 million capital gains exemption, or potentially you might run some losses in the business early, and so an LLC tax as a partnership might make more sense. And so just being intentional, kind of every step of the way from formation to growth, to when that exit is a little more tangible, right? I think can be super helpful, especially because there's lots of misconceptions about valuation and what business owners'
Yeah.
options are. And so when it comes to sort of exit planning, it really is their goals and the stakeholders that they impact and what they're really trying to accomplish should lead, right? And so if they want to create a legacy, well, I think that selling to the highest bidder in a private equity transaction won't make a lot of sense because the brand will be eliminated. There'll be impact on the community that they serve, and so maybe they want to explore other options like an ESOP or a management buyout. And so it takes sort of years to tease out those kind of different options and weigh the pros and cons and really understand the structures. And so we recommend the business owners start early, and it's so overwhelming, I think, when it comes to exit planning that just taking it one step at a time, very digestible, little sort of maybe 90-day sprints on sort of some of these different topics, and kind of going from there makes a lot of sense.
Reminds me of the book, The 12-Week Year, and also Built to Sell. Have you read either one of those?
Yeah, no, I have. And of course, the 12-week year more recently, and it's kind of actually it's been recommend that to a few clients because that's an amazing framework in that book, right? In terms of saying, hey, like we always think about the year in terms of cycles, and why is that, right? Let's flip that on its head and say, hey, like what can we accomplish in the next 12 weeks? And then pivot and start again in sort of the next 12 weeks after that. And so, kind of then waiting for the fluctuations in the calendar, and let's make the calendar work for us.
Yeah. And it gets down to what you're saying too about exit planning, where you need to have a basic idea of just like a pre-retiree couple. Hey, what does retirement look like to you? And same with the business owner. Hey, what does exit planning look like to you? Do you want to just get a big check and walk out? Do you want to, there's many options like what you were saying, and similar to the book Built to Sell, where that fictional story is like the guy's like, I'm so fed up, I just want to sell my business. But the advisor helps him get operationally tight and marketing tight and branding and all of that. And come to find out, maybe he got a little bit more money because he tightened it up, or maybe he didn't sell it as soon as he thought. And I would venture to say one of the conversations you have with your entrepreneur clients would be, well, what do you want? Like if you're going to retire at age whatever and sell the business, Is that all you're going to do? And maybe you find a business owner that says, I would be bored to tears if I just cashed out. So I really like that idea you're bringing up of, maybe the ESOP, or maybe, hey, why don't you stay on board as a consultant for a few years, and then that really keeps things. So what are some of those perspectives that you bring to your clients' attention when you start planning early so that they can be working toward that in those, blocks of sprints?
Yeah, you really keyed on something so important. Business owners they're pulled in so many different directions, right? And there isn't a lot of time, and so oftentimes we see people exit their businesses without doing sort of the work on the personal side. And, there's all sorts of stats out there. There's, X number of business owners, whether it's, somewhere between 70-80% regret the sale, sort of 12 months later. And, for us, we really want to just attack this issue from a lot of different ways, right? We think that you've had a successful transition when you already know what the purpose and identity that you'll have, as well as the activities that you'll do day to day, in your sort of post-exit life will be. And so, just going through all sorts of exercises and saying, okay, well, let's go through a model week, right? You say that, you want to spend a lot of time on the tennis court and with your grandkids. But what about the other 100 hours a week that you're going to be awake, right? And how are you spending that time? And I think that, just going, eyes wide open on some of these things and say, okay, well, some people are like, well, I want to spend more time in the community. I want to do some angel investing. I want to do consulting for that next generation of founder. But just know that, that may not go perfectly as well, right? Many angel investments don't work out, in terms of, financially. They could be doing consulting, and then all of a sudden, how are they going to feel when their advice is not heeded and they're not implementing some of the suggestions that they've given to those founders? And as well, if they don't find the right board, potentially that they want to participate with, many nonprofits, might just see that person just as a check, right? And it's not as fulfilling, right? And so there needs to be some experimentation, and sometimes, just finding the time to do that a little bit before the actual transition, so that they know for sure that this is something that's going to be fulfilling and give them meaning and occupy their time in a way that's that's impactful for them.
Yeah, and I think that if you were to ask 100 people, hey, well, what do you feel like retirement would be, or what do you want out of life? I think you'd get a big percentage that go, I don't know. So I think that when you're sitting down with a business owner going, let's talk about the end, it kind of freaks them out a little bit to go, we just launched, or we're only 5 years in. But to talk about the end, well, just like we know from Stephen Covey teaching, you need to begin with the end in mind. So having those conversations early on, and then checking in and just double checking, making sure all those places, those timeline touch points are in place. So talk a little bit about some of those main points that you're making sure. You mentioned business valuation. Isn't that like the starting point? Like, well, what's the business worth now? Because if a business owner said, oh, it's worth $5 million, but actual valuation comes in and says it's worth half that, you've got to get some perspectives on the same page, right?
Yeah, Mike, I think that because it's such a common issue, right? That there's a little bit of a value gap between what people think their business is worth and what the sort of market at that point in time is willing to pay for, right? And I think as well, oftentimes business owners don't really know what their expense level is, right? So just going and fleshing some of those things out on the front end and assessing their sort of readiness. Okay, well, like how much you actually spending? Well, that's kind of go through the financials. You're running the company car through the business. Some vacations or sort of quasi business, and then just really getting a true number, and then also getting a real valuation number as well for the business. And then if they're sort of saying, hey, well, like you need a higher number to support that expense level once you transition out of the business. Well, then the next step is, okay, well, how do we get there, right? Is there ways that we can get a higher valuation because we've increased EBITDA over time, or we may have a higher percentage of recurring revenue versus project-based revenue? implementing systems and processes and making the business less dependent on the owner. Like all these things can be done, but it takes time, right? And so I think what you're sort of, that first step is just really just an assessment, from the personal perspective, from the financial perspective, and then, of course, where is the business? Is it a saleable business? And then going from there and saying, okay, well, let's to kind of chip away at some of these areas of improvement, and with the goal to make a more valuable business and to be ready if there is a transition, and to give to have those options and flexibility, and then of course to know because I think one thing that happens a lot is when a sale or transition is imminent, well then people are going to kind of come out of the woodwork, right, and say, hey, maybe you should do this structure that's going to save some taxes, or here's some way that will make we can structure the deal, and so there's just a limited time when when the transaction is about to occur, that the business owner should be well versed, right, in terms of like, okay, well, you're going to go in PE, let's understand earnouts, let's understand asset sales versus stock sales, let's understand the different charitable structures that might be helpful in mitigating taxes, and different things, sort of like selling up front or taking a note, and kind of all these different things. It can be so overwhelming, but if you kind of just you chip away at it one thing at a time, we've seen owners get up to speed, and eventually they can teach this, right, once they go through that transition. So.
It sounds to me like when you think of, the term financial planning, for a retiree or a pre-retiree, you think, hey, let's look at stocks, bonds, mutual funds, annuities, permanent life insurance, all these things that, make up your financial picture. What percentages should they be allocated? The same thing goes into, financial planning for an entrepreneur business owner, because they are individuals as well as a business owner. So there should be some financial planning strategies put in place on the business side of things, but also at the same time, I would suspect that the owner, the husband or wife of the business owner, they need to be thinking of, okay, well, if we do this financial strategy for the business side of things, how is that going to impact us on the personal side of things too, right?
Absolutely, right? Because I think that, and that's where I think entrepreneurs really need to be, very judicious when they're sort of building their team, right? And sort of like, their attorney's going to sort of say, hey, like, this structure and these documents, and this is what's going to help move the transaction forward, and it's what's best for the business. But oftentimes, what's good for the business may not be what's best for actually that owner at the individual level, right? And so in real time, when sort of deals are moving back and forth, and there's negotiations, as sort of like, whether it's the terms of an earnout, or how much they're going to do as a seller note, or what the headline price of the sale is going to be, they sort of need to be working with their CPA and financial planner to in real time to say, okay, well, what does that mean on an after-tax basis for them and their goals, and how much risk is that for them at the personal level, and so just looking at it from a couple of different perspectives just makes a lot of sense, because I think that it can be overwhelming, but I think that if they have the right team in place, it can get done, and you can optimize outcomes.
And I think keyword there, team. And then going further, right team. And also, that also means don't just hear, oh, I should put an exit plan into place. So let me go Google that, or let me go chat GPT that. So you can get a lot of information online about a lot of different things, but you need to make sure that you're putting the right plan in place with the right team. Because, I think that too many times we all think, oh, easy fix, boom, boom, done. So once you put an exit plan in place with a business owner, how often are you recommending to revisit that and just make sure that it's working and performing the way that it should? Because I think that, maybe if you're 10, 15 years out from an exit, do you need to be revisiting every 6 to 12 months? But what is the frequency that you recommend?
Yeah, so I think it's interesting though. There's a business owner, couple actually, they're running a education business in the South, and they wanted to put together an exit plan, and they have no intention of selling the business anytime soon, right? And so they just were concerned, right? They have some that if something happened to them health wise, they wanted a document that they can present to, now they have adult children that don't live in town, and that, that they could just, almost a manual for them to say, okay, well, this was what needs to happen, for example, right? In terms of this contingency around, them not being in the business anymore. And so, that in that situation like that, where, they might be 10, 15 years away, we can revisit portions of the plan every year, right? It doesn't need to sort of, be, it doesn't need to be redone sort of every year, but, portions of it, we say, hey, look, the estate planning portion of this might have changed a little bit, right? Because, given, potential changes in the estate planning tax, exemption level. And so as the business grows and they kind of cross over into potentially paying an estate tax, well, then, we need to address sort of that first, right? Or, we'll get their sort of team on board to say, okay, well, you had a bunch of coverages on the insurance side. Well, now you can be self-insured in a lot of ways. Maybe it doesn't make sense, for example, to have as much, to be paying as much in premium, on certain coverages. And so, I think just those regular conversations, and talking about the business, talking about taxes, talking about retirement, talking about the next generation, the real estate, charitable giving, there's always something to discuss and ways to kind of tweak the plan. But I think that's, just even having sort of check-in conversations every quarter can be helpful in terms of, what we would focus on. But, you don't need sort of to redo the plan every year for sure.
Yeah. Just make sure it's heading in the right direction. Excellent. Well, I tell you, this has been really helpful to get that 30,000-foot view perspective, David, on how business owners and entrepreneurs should be having that kind of end in sight with an exit plan and putting some financial strategies in place. So if someone is interested in seeing what that would look like for them, what's the best way that they can learn a little bit more and then also reach out and connect with you?
Yeah, if they just Google David Flores Wilson, they can set up a time to chat through the website, or even check out the blog, which has content focused on financial planning for business owners.
Excellent. Well, thank you so much for coming on. It's been a real pleasure chatting with you today.
Great chatting with you, Mike. Take care.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.